It's Monday, and that means another week of FreightWaves Now. I'm your host, Anthony Smith, and coming up, we're going to have Falasca giving us a broker update. We also have Mike Baudendistel back with us again with a rail intermodal update. But first, we're going to go to the lovely Donny Gilbert with the carrier update brought to you by PowerFleet. Stay tuned.
Good morning, everybody. My name is Donny Gilbert. I'm bringing you the carrier update sponsored by PowerFleet. It's Monday. Everybody's really busy right now. Let's jump right into it. We're going to start off this morning looking at our outbound tender volumes. I brought here in the blue line is our outbound tender volumes for the U.S., but this is 2020, and I've compared it to the purple line, which is 2019. Looking here, we're right on line again. We've talked about this many times. Our volumes dipped a little bit over the weekend, but we're following the trend of 2019 very closely. Now, I made this map a little bit bigger today because I got a little bit excited. As you see, of course, as we get on down to the end of the month, we see volumes jump up. So right now, we're just kind of trailing along. It's first quarter, it's February, but there is a light at the end of the tunnel coming. And here we saw at the end of the month, volumes jump over to about 1025 or 225. So we see it coming up. We just got to hang in there another couple of weeks, and here about the 23rd, it's when we starting to see it start to pick up. Now, outbound tender rejection rates, I've brought you drive and outbound tender rejection rates, and again, I've compared it to 2019. Here we see the end of the year, we see it dropping down. We continue to drop down to 4.93%. So that's putting our spot market rates roughly kind of on the lower side of our contracted rate. So, you know, when you bid contracted rates, some bid low, some bid high. So we're kind of down halfway to the lower part of contracted rates right now. So we're still trickling down. Not a good sign. When comparing to last year, we're kind of flattening out like we saw we did last year, but last year at this time we were at 7.22%. So rates are a little bit softer this year compared to February of 2019. So hopefully as we get on in, these rates will start to turn around and pick up. Before I jump into a market of the day, let's jump into a little bit of weather right quick, because we have some serious conditions kind of going on here in the deep northeast. We're having some snow, ice, and of course we're having right here across this line where there's rain as well, we're having some freezing rain and icing going on. So carriers head up in the northeast, double check the weather if you're going on up into the Boston area, on up in the main areas, and just make sure that it's going to be safe, or possibly see if you can reschedule deliveries maybe for tomorrow or the next day, so your drivers don't get stuck in there. Headed out to the Midwest out here, more into the western region, we have Denver and Salt Lake again. We're having some snow pickups, some spotty snow showers going through the area today. But what happened out there over the weekend was really something that we need to talk about. Between Friday and Sunday, there were areas on I-70 up in the mountains that got up to 48 inches of snow near the Frisco and Breckenridge area. So those are some areas that are still being hurt by weather today on I-70 running through the mountains. On Friday, I believe an avalanche came down near the Frisco exit between Frisco and Copper. So that's, I'm sure, has been cleared by now, but of course it's gotten very dangerous in those areas. So be mindful of this area right now. We're going to jump into the Denver market as well as my update. Over the weekend, tender rejections picked up. I got tender rejections here in red. Because of this bad weather, we have some tender rejection rates picking up. The volumes have kind of dropped down over the weekend, and we're seeing this, and primarily we're seeing it on our long haul and tweener haul. Long haul loads have jumped up to a 13.8 tender rejection rate, and our tweener hauls have jumped up to 16.39. Tweener being the loads that run between 450 and 800 miles. And so a lot of these loads that might be going, maybe taking I-70 westbound, those are going to be affected, those are going to be rejected, which is in turn going to drive rates up. Here on the map above us, I have the change in tender rejection rates, VOTRI, so it's drive in, and you see, of course, Salt Lake City, the Reno market, and the Denver markets are all tender rejection rates been picking up over the last week. And a lot of this has to do with the weather. So I appreciate it, guys. Thank you for tuning in, and that is our carrier update for Monday.
The comprehensive logistics offerings from PowerFleet cover in-cab ELD, fleet management, trailer tracking, cargo monitoring, and tracking other assets such as chassis and intermodal containers. Power up your operations with PowerFleet.
Good morning, everyone. I'm Luke, and I'm bringing you another broker update. And happy Monday. I know Mondays are typically tough, but let's try to start off the week strong. All right, so we've got our charts here behind us, something you guys are familiar with. In blue, we've got our overall outbound tender rejection index here in the United States. So we're sitting right about just under 5.5% there in the bottom right on your screen. Pretty low from where we'd like to be, but it is flattening out. Typically speaking, this is about where we'll see the low point from this time last year around these months. So we'll see if it dips any lower, it might, but for the most part, this is typically where you'll start to see that flattening out from this time last year. The orange line here is the volume level. So you can see here we're kind of dipping a little bit lower. There's a little bit less volume to move out. We're sitting about 95.58 on the index scale. So again, continuing to get lower. Remember, we love to be above 10,000. When we're above 10,000, that means we're growing. When we're below it, it means that we're contracting. So again, keep an eye on that volume level. As it continues to go down, there's going to be a little bit less freight there, and it's going to be a little harder for you to capture extra loads from shippers that you wouldn't normally do so. So before we dive into any specific markets, we're going to take a look at our call map here, or our money map as I like to call it. So this is our weighted rejection index, and all you really need to know here is markets that are in blue. The darker the blue means that there's typically a little bit of tightening, meaning shippers are having a little bit more difficult time covering their freight. Now, don't get super excited just because you see a lot of dark blue here. Really, you're only talking about 3.5 to 4 on the index scale. Nothing super exciting. We'd love to be in those 7, 8, 9, 10 plus range. So again, we're kind of at the low end there for shippers experiencing some tightening. That being said, if you are going to make some calls today, Colorado is going to see a little bit of tightening. Salt Lake City, a little bit here in the Pacific Northwest too. You might have a little luck, especially if you're moving some reefer freight, get some of that freeze protect out. So just keep an eye there as you're calling around today. The market we're going to take a look at, though, is going to be Salt Lake City. Salt Lake City, a lot of peaks and valleys over here since the beginning of 2020, and you're noticing that we kind of hit a low point there, about 5% tender rejections, and we've really popped off here over the last couple of days, sitting at about 8%. That's a good sign. So if you're moving freight, that's a really good time to increase your spot market bids on any shippers. Market's tightening. They're having a little bit more trouble covering their loads. So you might be able to protect yourself as carriers are going to ask for a premium as those tender rejections continue to climb there. So do keep an eye on that as you're moving freight. Something we're going to look at a little bit more in detail here out of Salt Lake City is some of the highest tender rejection lanes out of Salt Lake City for today. So that big one there, Salt Lake City to Seattle, sitting at right at over 16% tender rejections. Might be a little hard to see on your screen, but that's 16%. Very, very high. Also, Salt Lake City to Grand Junction and Twin Falls, Idaho is going to be very high. Grand River, Denver, a lot of those markets are sitting pretty high. To take a look here, this chart down here below is the tender rejections going to Seattle from Salt Lake City. So you'll see here we're sitting at about 16%. It's really starting to push up, meaning that you can really increase your spot market bids on any freight you're moving on that lane. Over here is our predictive rating tool. So just to give you an idea of where pricing may start to lead, we're sitting at about $1.81 today. We'll look at the median price point. That's without fuel, so be sure to add your fuel surcharge to get your all-in rate. And it looks like it's going to hang out there for about a week, and then there might be a little bit of softening there as we go out about a month and 3 months. So do keep an eye out. So if you're trying to move freight on that lane, it might be a good opportunity to potentially lock in some bids now with some shippers, as you might be able to get a little bit of a premium as things start to soften a little bit down the road. So anyways, I'm Luke. That'll do it for your broker update, and have a fantastic Monday.
Voices from every corner of the supply chain concerning all modes of transportation. From the world's largest logistics podcast network, this is what the Freight Tech Revolution sounds like. Freightcast presented by FreightWaves. Subscribe now wherever you get your podcasts.
Welcome to your rail and intermodal update. I'm here with Mike Baudendistel. Mike, what do you have for us today?
So up here I have a chart of speed of oil trains on Grand Trunk, which is owned by Canadian National. And the reason I have this up here is some pretty significant news came out of Canada. The Canadian Transport Minister issued an order that all trains with at least 20 cars of hazardous materials have to go no faster than 20 miles an hour or 25 miles an hour, depending on where they are. So the reason this happened was in Saskatchewan. There have been 2 pretty significant derailments within the last 2 months on the same stretch of track. They want to see what's going on. So they're saying the oil trains need to go slower, also other hazardous materials, things that are flammable, petroleum, and those type of things. So these train speeds are going to have to come down. This is for the next 30 days, starting on Saturday, although they could say it could be longer or shorter than that.
Gotcha. And so you mentioned that this is going to affect those carrying those materials. Is it going to have an impact on overall movement of goods?
Yeah, I think it will, particularly on CN and CP. The railroads run a network business, and really it's a single track main line over the long stretches of track. And so what could happen is they could be waiting for these slower trains that move hazardous materials to pull into a passing siding so the next train could pass. So it could have some major impacts when trains are running at speeds that vary too widely. So it could impact shippers that are not hauling anything, not shipping anything hazardous at all. Something like grain, just because of the network impacts.
Gotcha. And so next 30 days.
The next 30 days, I mean, it could be longer or shorter than that. CN has said that they are placing a more strict protocol in order to ship hazardous goods, and really an embargo is the word they use, and a notification to shippers that on additional hazardous materials have to get those approved. So I think it's going to be difficult to ship incremental hazardous materials if they are going to slow down the entire network.
Gotcha. And what else do you have for us today?
So the other thing I have today is just sort of some thoughts following Hub Group's earnings last week.
Right.
This is the big domestic intermodal company, and they provided some guidance on their 2020 outlook. They said specifically they thought that intermodal volume would be up. Now part of that was because they're on board with the thesis that truck rates are going to be higher in the second half of the year. We've heard that over and over again.
Right.
They're on board, and you can see why, because it is so competitive right now between intermodal rates and truck rates. On the intermodal pricing side, they actually said that intermodal pricing could be probably down for the entirety of 2020 versus 2019. That's because of the front half loaded bid season, which takes place in the spring. The bid season tends to follow on how market conditions were in the fall of 2019. You remember me talking about the fall of 2019. That was a muted bid season, for pricing. So you see this strong pricing in intermodal in 2018, and it being rather weak in 2019. So I think they're expecting pricing to be down a little bit for the entirety if we're comparing 2020 to 2019.
Gotcha. So definitely something that's going to be impactful for shippers.
Yeah, I think so. I think it's actually good news for shippers, because if they're shipping intermodal, get a little bit of a lower price. Maybe you can lock that in, if in the spring for the entirety of the year. Of course, transportation contracts don't have a lot of teeth, but the extent that those rates hold, I think they get a little bit lower rate.
Excellent. Mike, thank you so much for that insight. Thank you so much as well for tuning in for this edition of FreightWaves Now. That's going to do for our rail intermodal update, and that's going to bring us to the end of FreightWaves Now. The fun doesn't stop here. We're always posting around the clock, so check us out on all your favorite social media platforms. And don't forget about our FreightWaves TV app, where we're always streaming on all your favorite streaming platforms, including Apple TV. And for all my fellow Android users, we have you covered as well. We'll see you on the next episode.
Is the trade war back on?
Trade war.
Trade war, full-blown trade war.
15% tariffs on $112 billion worth of goods.
Hours earlier, China announced tariffs of 5% and 10% on U.S. products.